Okay, I'd like to take this opportunity to welcome everyone to today's event. This is a earnings season update. Today's Tuesday, August 10th. You got John Hopkins, Tom Bowley going to be jumping in here in just a minute to get this thing moving. Want to welcome anybody who's new to EarningsBeats if you're stopping in today. Thanks for taking the time. Thank our wonderful veterans who've been with us and members for many years. All the support you've given us over the year. Really appreciate it. As usual, this event will be recorded. So if for some reason you're unable to stick around, don't sweat it. You'll be able to listen at your leisure. We record all of our webinars, so our members have access to a tremendous amount of educational information. Now, I do want to mention a couple of things coming up. Next Monday, we will have a sneak preview of our top 10 stock pick event. And for those of you either new to EarningsBeats, stopping in for the first time, every 90 days, Tom selects 10 stocks for each of the 4 portfolios that we present to members, 40 stocks in all. These are ones he thinks are some top prospects to be held for the following 90 days. The actual draft, or where we actually unveil the stocks, happens on the 19th of each month. So we'll be having this sneak preview next week, and then on the 19th, we'll actually have the selection of the 40 stocks. So that's something that you might find to be very interesting. We'll have our options Max Pain webinar a week from today, I believe. Yeah, where Tom will look at stocks as we get to the monthly options expiration. Always a terrific event where Tom talks about stocks that could make big moves into that Friday close, which represents the monthly options expiration. So a lot of stuff going on. We'll make sure we keep everybody up to date on all of these events. They come sort of fast and furious sometimes. Anyways, with that said, I'm going to see if, and hopefully Mr. Bowley's in the house. How's it going, Tom?
It's going well. How you doing, John?
Good to hear your voice.
Yeah, good to be here. I did a little traveling over the weekend, so
yep,
kind of hard getting back into everything and trying to get everything caught up, but we're getting there.
Yeah, I mean, it's unbelievable how quickly the summer's gone. Like we're, mid-August here, and I don't know, people have different thoughts about, how the market performs throughout the year, but there's no denying that this market's got some kind of bid underneath it. Once in a while you get a pullback, but overall it's been fantastic. Anyways, I'm going to go ahead, step aside, because I know you got a bit to cover here, and I'll be back a little bit later when you're done.
All right, sounds good. Go ahead and get started here. I'm going to pull up that agenda for tonight so we can go through and just talk about some of the things. I don't think this will be a very long webinar. Some of them, we go through a lot of information, some of them, so they can stretch out. This one hopefully will be no more than about 45 minutes. That's the goal. And the idea here is, we want to get through, basically the whole idea behind this event and why we're doing it, why we do all this work around earnings season. And also we try to put together a lot of this information so our members can use it however they would like to use it as well. So first, again, just want to welcome everybody. Appreciate you taking time out of your day to be here. I think that there's a lot of really good information, not just with what we'll go over tonight, but also on the spreadsheet that'll be made available to our annual members. At EarningsBeats, I can only tell you that there is a lot of work that goes into the spreadsheet, just many hours and hours. Give a little shout out to Matt Townsend, who works with me on this particular project. He does a lot of the background stuff, gathering all of the details and the information, the earnings and so forth. And so as we go through and you see how much information is accumulated in the spreadsheet, you can just kind of keep in the back of your mind anyway, that it was a lot of this work's done by Matt Townsend. So I want to thank him for that. I want to go through first, when we get into this, and talk a little bit about the analysis and the spreadsheet and what it is. And then you can decide whether or not it's something that will benefit you, maybe benefit you, or, nice to listen to and hear about, but, maybe you have no interest in all of these numbers and this analysis. But for me, my background in public accounting, it's hard for me to get too far from the fundamentals. I still do almost all of my trading based on technicals, but I still find that the fundamentals are very important. And over time, I know this past year with the pandemic has been kind of a crazy year. It might be the craziest, especially in 2021, because the rotation has been so significant, so severe, and so quick. Sometimes from literally day to day or week to week, all of a sudden we've got new leadership, and the market's just kind of going in a completely different direction. The one common denominator, though, is money is coming into stocks. We are going higher. We continue to move higher, as John was alluding to. Doesn't seem to matter what the heck happens in the market, what news is out there, which group is leading, or how long. The market seems to go up. And when you just look at the S&P 500, you don't really see all of the craziness that's been taking place underneath the surface. But throughout this year, I've been saying when we do our portfolio drafts, I'm not really that concerned about the overall market. I'm concerned about the rotation and trying to get the rotation right. And it has been very difficult, to say the least, because strength just doesn't last for very long. Unfortunately, we think we have something for a few days, and then all of a sudden the carpet gets pulled out from under us, and we've got, new leadership. And the stocks that were leading last week are, getting hammered this week, but then they'll probably come back at some point, next week or the week after. I mean, that's just what we've been going through in the short term. So if you've been frustrated from a lot of the rotation and a lot of the whipsaw action within sectors and industry groups, you're not alone. Trust me, there's a lot of folks out there that are struggling. Now, if you're trading the spider, then you probably haven't really noticed as much, because for the most part, the S&P 500 has been going higher. It's just a question of which groups have been leading it and which groups have been lagging. It hasn't been consistent, that's for sure. So anyway, we're going to go through that description. I wanted to go through also the way I sorted this. So there are 3 different tabs on the spreadsheet that I'm going to go over with you in just a minute. Last quarter, we sorted them a little bit different. I know that there are some adjustments that have to be made to the spreadsheet. We just haven't had time. I haven't had time really to get into it to make some of these adjustments. And I'll point out some of them as we go through the spreadsheet, so you have an idea what I'm talking about. But that's why I don't have a spreadsheet that's got a lot of the different sorting that I had in the last quarter, but we'll talk about that. We'll go through some of the analysis, highlight some of the things that I've seen, and then we're going to wrap up with the best 10 earnings reactions. Now, there are different things that go into what I call the best 10 earnings reactions. It's not just which company went up the most. It's not just which company was accumulated the most during the day. It's not based on what sector or industry group these companies are in. It's really based on a lot of different factors, including all of those. But I'll go through and talk to you a little bit about it when we get to that. But the first thing I want to do, I'm going to take you over and show you the spreadsheet, just so you can get a little bit of an idea of what the heck I'm talking about here. So let me go ahead and pull this up. Should have this Excel spreadsheet now up. And what I want to point out first is this started back on July 13th. So this was when we had Pepsi report, JP Morgan reported, Goldman Sachs reported. The next day we had Wells Fargo, PNC, Bank of America, Delta Airlines. Those companies reported, United Health, I think the following day, and so forth. So July 13th is when this started. Now, the data that you see on this spreadsheet, all of the earnings data, estimate, actual, all of this information is for companies that reported on July 13 through July 30th. Okay, so right now this is going to be the first 18 days or so of earnings season. That's what you're going to be getting here. Those companies that had market caps of 1 billion or greater are included on here. So you're not going to have every single company, but you are going to have quite a bit. There's going to be a pretty significant representation here of companies that have reported since back from July 13th all the way through July 31st. So that's first thing. So when you look at this and I start scrolling down, and I'm just going to grab this and just drag it, but you will see there is a lot of data. I started on what, line number 9 or something like that. And at the bottom is line number 1676. I said through July 30th, there's actually on this particular list there, it goes through August 6th, but we couldn't complete the spreadsheet for the companies that reported August 2nd and later, because one of the things on this spreadsheet, I'm going back to the top, so just bear with me. One of the things on the spreadsheet is how a stock trades 1 week after earnings. Well, we haven't had a chance to update those companies that reported last week. So when you go down and you start looking at the companies on this list from August 2nd through August 6th, they haven't been updated for the where they closed 5 days later. So I haven't been able to do the 1 week after earnings calculations. That's why that's not there. But if you look at the data coming across, we've got the date, whether the company reported after the market closed or before the market opened. Got the ticker symbol, got the sector, the industry group, the estimate for the quarterly earnings, and also the actual. Now, there were some companies that maybe didn't give us an actual or didn't give us an estimate, one or the other. And so we may have not provided, if it's not on the spreadsheet, it's because it wasn't reported to us. And we used most of the information coming or that is on this spreadsheet came from Zacks. So if you're wondering where we're getting it from, Zacks.com. So then I've got the date 3 weeks prior to the close before they reported earnings. So the whole idea here is that we're trying to get that pre-earnings advance. And you'll see a column over here later that shows the pre-earnings advance in terms of percentages. So this is what each company did in the 3 weeks leading up to its earnings report. Then you'll see the price for the prior close. So this is the close prior to reporting earnings. This is the opening price after earnings came out. And here's the closing price the day after earnings came out. So let's say a company reported on a Tuesday morning. This would have been the Monday close. This would have been the Tuesday open. This would have been the Tuesday close, okay? Just so you get a sense of where these numbers are coming from. Then we did a 5-day look back to see, okay, well, what happened 5 days after earnings? So that's the July 20 date. That's 5 days after WAFD reported. And here was the price. And then everything you see going across here are just the percentages and the calculations. So you've got the pre-earnings advance. You've got the initial reaction. This is just calculating the difference or the percentage change between where the stock was when it reported earnings, where did it close just before earnings, and where did it open the next day. That's the initial reaction. Then there's a 1-day change, which looks at the prior day's close versus the current day's close. So the prior day before earnings and then the current day's close after earnings. What was that 24-hour change? What does that look like? And then we've got the column that I kind of look at a lot, I think is kind of important to me anyway, is the open to close AD change. This is accumulation distribution. So you got your earnings report, whether it was yesterday after the close or this morning before the open. And then this is the percentage change from the opening bell to the closing bell. So company comes out with great numbers. It's trading at 20. And then the next day it opens at 22 and it closes at 24. Well, this percentage is going to be the difference between that 24 and the 22. It's going to ignore the gap up. It only is looking at the current day. So that's why it's like the AD, if you're familiar with the accumulation distribution. And then we've got this calculation here for post earnings. So this spreadsheet, and by the way, at the end of this webinar, this will be available to all of our annual members for download. I know Erin is working on that now. So she is going to have that together. And by the time this ends, you should be able to go in to those downloadable items and you should see this. And that's actually Q2 earnings reactions. All right. So the first tab is sorted by date. Now, the second tab are all of these same companies, but they're sorted by the open to close, this AD change. So this is all 1,670 companies sorted best to worst based on were they accumulated or were they distributed. All right, so the first one, and I'm going to pull this chart up in just a little while, but UE was the first one, had a 33% accumulation during the day. Well, it really didn't. And I'll explain that in a bit. But you've got to be careful, you know, just like anything with the charts and all, you can't take anything at face value. You really need to do a little follow-up work. And when I looked at this chart, this company did not have a huge accumulation that day. The stock, it might have even been a misreported price at the very opening bell because the entire 33% basically went up in the first minute, which is not possible. It's not going to happen. And the volume wasn't that great in the first minute. So there really wasn't a lot of accumulation. So that's very misleading when you look at that. But anyway, this particular tab is sorted using this column T, which is essentially accumulation distribution. And you can see there were a number of companies that went up quite a bit from the opening bell to the closing bell. And that to me is a sign of accumulation. New news out. You know, if you're trying to buy or unload a large position and you're an institution, you can't just put a market order in at the open. It's not the way institutions get their shares. They go to a market maker and then the market maker buys on behalf of the institution and does the best they can to get their best possible price. And in doing so, pardon my French, but basically they're trying to screw every retail investor out there to try to get best price for their institutional clients. I've never worked for a market maker, so I can't claim to know all of the ins and outs of what market makers do, but I can tell you they're not just out buying at market for their institutional clients. They are trading, they're trying to accumulate positions for their clients, and they're going to try to do so at our expense. So got to understand, you know, when you see these big distribution or accumulation numbers, it's probably market makers either buying or selling a stock. At least a part of it's probably attributable to that. And they're trying to do that on behalf of their institutional clients. Now, there could be just be a lot of traders out there as well buying stock. But my point here is market makers cannot accumulate or distribute on behalf of their institutional clients without volume and without much movement in price. Because who in the heck is going to sit there and just keep selling them a lot of shares at the same price? So this kind of takes place over lots of time, the accumulation and distribution phase. I don't know how many of you are familiar with like Wyckoff, but even though I don't talk about Wyckoff and I haven't really studied Wyckoff, I've actually had some very good conversations with Bruce Fraser over at Stock Charts, who he is an expert in the Wyckoff approach. And I think a lot of what I do is very similar to Wyckoff. And so if you want to learn more about accumulation and distribution phases, you may want to take a look at Wyckoff and begin to get a little bit more in tune with that, because I think a lot of that, in essence, describes what happens in terms of market makers accumulating and distributing shares for their institutional clients. Anyhow, I digress, but just wanted to mention that. So this is the second tab. And then the third tab, I sorted by pre-earnings run. So if you go to this column right here, pre-earnings advance, these are how companies traded in the 3 weeks leading up to their actual report. And look at what the leader was, Moderna. You think they've been accumulated? You think Wall Street knew what was going on there? Moderna has been absolutely on fire, not just leading up to earnings, but also since earnings. 259, 3 weeks prior to the close when earnings were reported. The stock was at 259. I don't know if you've seen it. It's almost 500. It had a down day today, but it has had a huge run, huge pre-earnings and also huge post-earnings. It's continued to perform really well. So here's an opportunity to take a look at some of the stocks that have been accumulated very heavily leading up to earnings. Don't know if you saw my Trading Places blog article that I wrote earlier today, but I featured a couple of stocks in there. One of them was this semiconductor, SITM. And I talked about how this stock was accumulated after they reported earnings. What I didn't talk about too much was the fact this company went up 23% before in the 3 weeks leading up to earnings. And then if we go over here to the sorted by AD report, see the number 2 stock, SITM. And over here, the day that it reported earnings. So it went up almost 23% before earnings. And then it went up another 18% the day of earnings from the open to the close. And had an initial reaction, a gap up of 10%. So this stock has been absolutely on fire, SITM. I would go out on a limb and say it's been the best semiconductor stock approaching and throughout earnings season. Now, it's not a stock that trades a lot of shares, so that might scare some folks away. There are some days where it maybe only trades 100, 150,000 shares. So you got to make sure you're comfortable with that. But this particular spreadsheet does not take into account volume. So if a stock is illiquid, it is still going to be on here as long as the market cap's over that $1 billion level. All right, so that's the spreadsheet. Now, I do want to just caution you, because when I was going through here, I did notice that there were some industry groups that are included in the XLY that need to be in the XLB, some materials industry groups. So got to do a little bit of reworking of some of the sectors in terms of their actual returns. You know, like we've done in the past, we've broken down the gains and the I've even broken down like the AD column by sector, not just individual stock, but by sector. But we need to do some work before we can get you a final copy of that. But that doesn't stop us from giving you all this data. And that's the key here, is I want to make sure that our annual members that want to get this information have it available. So check on the website later after the webinar is over, and you should be able to get that and download what we have at this point. We will be updating for this past week's and the current week's data probably within the next week or so. We'll try to get an updated spreadsheet out. And on that one, we should have everything corrected in terms of some of the allocations to the various sectors and industry groups and so forth. All right, so that is the spreadsheet. So talk to you a little bit about the analysis, what we did, went over the sorting options, the date order, the AD order, and the pre-earnings order. As far as some of the highlights, I don't want to go over too many of these because, again, some of those groupings were a little bit off. But let me just give you a couple of numbers that I know are not off. The first thing I can tell you is that, and I broke this down by industry group. Again, this is not on the spreadsheet that you're looking at right now. So just bear with me. I'm just going to read some numbers off. But I was looking at the the AD change in some of the industry groups, just to give you some ideas. In communication services in the internet area, LLNW. And as I'm giving you these, I'm also going to jot them down so that we can go over the charts when I pull the charts up for you in just a minute. So XLC is LLNW. This stock was up 9%, over 9% from open to close after they reported earnings. So pretty good move there. Snap was another one in the internet space, went up more than 5% from its open to close. All right, let's see. Others of interest. Let's move on to financials. Among the financials that were interesting, in consumer finance. In consumer finance, LC, which is Lending Corp or Lending Company, something like that. They had a really good move. And then another one was FCFS. So we're going to pull these charts up in just a moment. Let's see, another one. In the property and casualty area, PGR, Progressive. That one was up over 5%, 5.5% from open to close. All right. In the specialty finance, CG, which I think is Carlisle Group, up 4.79% open to close. Now you have to understand something as I go through these numbers. You have to understand that when if a stock gaps up or gaps down, market makers tend to go the other way and go opposite the initial gap. I'm sure most of you have heard about gaps filling, filling the gap. So normally what you see is a stock, if it gaps up, it pulls back, or if it gaps down, it goes higher. But these are stocks that many of these could be ignoring that. Some of these could be gapping down and then reversing, but others, like I told you about that SITM, that one gapped up and kept going higher. So there wasn't a lot of distribution after it gapped up. In fact, there was none. There was accumulation. It continued moving higher. All right, how about in the industrials? GNRC was one that I thought looked pretty good. And that is in building materials. Next one, that was up like 6%. That one gapped down and then came rallying back strongly. Another one in business support services, CSGP. Oh, and in that same space, Expo, EXPO. Let's move on to let's see, I'm just flipping through a list right now. Just want to go over the ones that look pretty significant. In computer services, now we're moving on to technology. And I'm only going to look at the 5 aggressive sectors: XLC, XLF, XLI, XLK, and XLY. But within technology, PRFT, computer services. So we'll pull that one up. Enphase in renewable energy. That one had a really nice move after it opened. It rallied 6.5% from open to close. Semiconductors. We going to give you, we've already talked about SITM. So how about SIMO and MXL? Those are two very strong. They went up 9.5%, 8.3%. Teladoc in software. This is an interesting company. It's been beaten up pretty badly, but I really like that candle and that recovery. After gapping down, it rallied 12.6% from open to close that day. So we'll definitely take a look at that one. Also NXGN in software. All right, let's see others. I'm going to move on to the XLY. Let's see what we have here for you. TPX, which is Tempur-Pedic. That's in the furnishings area. That one went up over 10% from open to close. So again, very heavily accumulated. Also, Domino's in the restaurant area. That's DPZ. That one ran up 11%. Yeah.
People are asking, are you trying to share another screen or not yet?
Not yet.
Okay.
No, just a couple minutes. Now I'm working off of a sorted spreadsheet, but there were too many errors. We need to make some changes before I share that. That's why it wasn't on the other spreadsheet. Let's see what else. Actually, that's it. So those are the ones. I'm going to go ahead and I'll pull this spreadsheet down now. We'll look at some charts. So the first chart I want to show you, remember that UE, which was the first, the number one accumulated stock on the list. Remember 33% it went up. Well, I want you to look at this chart. You see this right at the beginning of the day where it looks like it opened at 14 and then ran to 19. That's what they're considering accumulation. Well, there was only 50,000 shares traded in the first, this is a 5-minute chart, or excuse me, 10-minute. These are all 10-minute candles. So the 10-minute candle, 50,000 shares traded. Now, did it trade from 14 to 19 in the first 10 minutes? I doubt it. I don't think there's a whole lot of accumulation when you're only talking about 50,000 shares. So I'm not considering UE on that list. I just, again, looked at it on the chart, and I think the numbers really don't tell the whole story. I think you got to look at it on the chart. I don't see a lot of accumulation. Now, if I pull up SITM on this chart, look at the difference. Now, do you see all of the volume coming in the first hour and a half and how the stock just kept being bought up? That to me is accumulation. And after a little bit of selling, you can see the stock continues to roll. I don't know where it was when I posted the article this morning, but I want to say the stock was probably, I don't know, 197, 198 when the article went out. Maybe less than that, maybe 195. Stock was up probably another 5% since I posted the article today. So SITM's done extremely well. But let's go and look at some of these that I just pulled up. I'm going to go through these pretty quickly. So LNW, and I'll pull them up, relative strength charts. But LNW, if you look back, here was the move over in here. Earnings were okay. This was a decent move, but look, it's still in a downtrend. AD line's been trending lower. I don't know. This one, after I looked at it, I wasn't that impressed with it. So then move on to Snap. I mean, I think this is a good starting point for these companies to be looking at companies that appeared to be heavily accumulated off of our spreadsheet and then go to the charts and see if you're looking at, if it looks like it's being accumulated. So in the case of Snap, which gapped up here, I mean, again, this is a company that gapped up a lot with earnings. So normally you would expect it to head in the other direction, but instead on very heavy volume, the stock continued to move higher, and you can see the AD line jumped. So this one, the AD line's been very strong. Snap, I think, continues to be a very strong performer here. So Snap is one that I would be interested in. LLNW, not as much. All right, next up, LC. This is Lending Club. I think I said Lending Company or Lending Corp. Lending Club, gap up, look at that volume and the breakout above that prior high. And we've continued going higher. Look at the AD line. This is a stock I'd be interested in trading. I want to see a pullback, but it would be on a watch list. FCFS. Now this one had a pretty nice move here with its earnings. It's got a nice little cup going, maybe handle building, but the AD line has pulled back. Even with earnings, I'm not seeing huge volume. Today's volume was only 100,000 shares, so it's not real liquid. I would pass on this one. PGR, Progressive. Here's where we had a gap down, and then we had a big recovery. Now, this may have simply behooved market makers to take this one higher because of the big gap down. Market makers are on the long side, and then you rally. Kind of normal for a gap down with earnings. So it's okay. You know, when I'm looking at it relative to its peers, it's near a 52-week low. That's not what I want. I want stocks that are moving. If I pull Snap up again, I didn't show you that, but look at Snap relative to the internet stocks. It's essentially at about a 5-month relative high, not far from a 52-week relative high. AD line moving higher. That's really what we want to look for. Carlyle Group. I think Carlyle Group looks pretty good here on this pullback to the 20-day moving average. It's been selling off a little bit, but after the gap up, this was the earnings move. It's pulled back. It's testing gap support and the 20-day moving average. The AD line's been pretty strong on a relative basis. Just recently, the stock was pretty high relative to its specialty finance peers. Now that it's consolidating, it's pulling back, but many times that's an opportunity to get in. GNRC, Generac. AD line strong. Here was that candle. This was earnings. Look at the volume. Very heavy. Gap down. We were selling off intraday and then huge rally back. And now the stock, after going back down to 400 again, testing that 50-day, starting to turn back up. Generac still looks good to me. I would continue to keep that one on a watch list. Business support services. This is CoStar Group. Now this one's been doing nothing. Here was that big hollow candle. So that's why it's high in terms of accumulation. But look at the AD line, really not supporting it. Look at the relative weakness. This one I wouldn't be interested in. Expo, look at that AD line taking off. Look at the price action. Look at the relative strength. The only problem I have with this one is that typically volume can be a little light. So if you're okay with that, then I would be okay trading it. Next up, PRFT. This is in computer services. AD line, great. Price action, great. Relative strength, great. Just need a pullback. This one should be on the watch list. ENPH, Enphase, AD line strengthening with price action. The relative strength's been off the charts. Just recently, 52-week high. Recent pullback, probably an opportunity. Within semis, here is Silicon Motion Technology. Look at this move up. AD line breaking higher. Great volume. Relative strength going to a 52-week high. Just need a pullback. MXL, this is Max Linear. AD line great. Price action breaking out. Good volume. Relative strength, superb. This is a stock absolutely to consider trading. Teladoc. Okay, so Teladoc gapped down near this low. So it's almost like we have a double bottom. Look at the volume coming in, and we finished on the high that day. And then the next day, volume was pretty good. We had another hollow candle. Since then, volume's tailed off a bit, and we've just seen this sideways action. I don't know. It just seems to me like Teladoc, after a pretty rough period since February, I mean, it was up to 310. Now it's half price, 50% off sale. And it looks like it's starting to be accumulated. Look at the AD line. AD line's not far from a 52-week high. Price action's near 52-week low. Teladoc looks very interesting to me. You know, what you're seeing in terms of price action may not be what's going on in terms of accumulation. NXGN, gap down, rallied back, AD line started to weaken. This stock's been under pressure for a while. Look at the relative weakness. I want corroboration on the chart. I don't want just a good accumulation number on the earnings spreadsheet. I need to see more things, and hopefully you can see how I'm differentiating between these stocks as I go through. Some look good to me, some don't, even though they all have one common thread, and that is that they had good accumulation the day after they reported earnings. Next up, TPX. I like this chart. AD line strong. Look at that big, look at the volume. Heaviest volume day of the last 52 weeks. And look at that hollow candle finishing almost on the high. I see a bull flag right here. I think it's going to break out. I think stock looks good. Relative strength, new 52-week high. Last one I wanted to go over here is Domino's DPZ. So we've been moving higher, but look at that earnings candle. Only thing is here, the AD line hasn't broken out to a new high yet. So that's a little bit of a concern, but this has been Domino's has been a great performer within the restaurant group. Let's see if that 20-day holds. If the 20-day doesn't hold, then I think we could go down and get a test around the 487, 490 area, something like that. But still, Domino's, I think, looks pretty good. I'd keep that on a watch list for sure. All right, last thing I want to do. I want to go through and go over the 10 stocks. These are what I would consider the top 10. Now, keep in mind, I'm going to keep a portfolio of these 10 stocks going forward. And I'm going to report on it just like I do our other 4 portfolios. So, keep that in mind, that in putting this together, I don't want to just get 10 stocks within one sector or one industry group. Kind of putting this list together based on the earnings reports, based on the reactions, the AD lines, and based on the charts. They did not necessarily all beat revenue and earnings estimates, which is required for 3 of our 4 other portfolios. The only one where we will allow an earnings or a miss is a stock that has a strong AD line, our strong AD portfolio. That's the only portfolio in the past. So as I go through these, I just want to show you the stocks and what I'm going to call our earnings reactions portfolio, just because I don't have a better name for it. But I'll tell you before we go through these names, there are 10 stocks, 3 technology, 3 consumer discretionary, 2 healthcare, 1 financial, and 1 real estate. And all 10 of these had pretty good candles. In other words, hollow candles after reporting earnings. So the 10 that I went with are, first up, SITM. So this is SI Time Corp. If you want to learn a little bit more about it, go to my blog article today. I'll come back to this in 1 second. But if you go over here, deciphering this earnings season, winners and losers, SITM was featured over here. Very strong stock. And then Groupon was featured as one of the most heavily distributed. We didn't really talk about distribution here because we're in a secular bull market. I'm much more interested in the bullish stocks than the bearish ones. But here was Groupon getting absolutely crushed after earnings report. And by the way, if you read this earlier, I did have an error in here. I had the profit and loss reversed. I had them missing their earnings. They actually beat earnings and they gapped up. and then sold off afterwards. Huge sell-off. So it was a sell on rumor, and then they came out, they bought on the news at the opening bell, and then the selling accelerated. We may get a recovery here at some point because the stock's been beaten up so badly, but this is a stock I'd be real careful. A lot of distribution taking place. Anyway, just wanted to point that out. So you can go back over and you can read that in a bit if you'd like. So the first stock, SITM, I already talked about it, but I love the way this thing is set up. Volume, this one's a little illiquid. Now, it does average probably about 200,000 shares, and it is a $200 stock. So it's better than a stock that averages 200,000 shares and is a $10 stock. The dollar volume is still pretty decent on this one. Next stock up, Penn National Gaming, PENN. I'm just starting to see some good signs on this stock. I saw the recovery here after earnings. It gapped down, looked like it was going to a new low, was trading off early in the morning. And then look at this candle it printed on that kind of volume. I think there was a lot of accumulation. Now, I'd like to see the stock break back up above 75, but I don't have that luxury if I'm putting together a portfolio today. So I'm putting Penn into the portfolio. I like the fact that the AD line shot up with this move to take out the prior high. So it looks like we're starting to put higher highs and higher lows in, which is good. And then also we're just now starting to turn back to the upside, trying to hold on to a little bit of relative strength here. But more importantly, versus the gambling index right here, we've come off this bottom and we're starting to show a little relative strength. So just those little factors, along with that huge accumulation, I'm gonna go with Penn. Third stock, Fastly, very similar, by the way. Gap down and then massive volume and a lot of buying. So I think Fastly may have bottomed. Now it went up, tested gap resistance, rolled back over. We may have a little bit of short-term pain here, but I do like the fact the AD line right here has jumped to about a 3-month high. So Fastly, even though it's gapping down, hasn't been a very good performer. I think it's starting to show signs of accumulation. So this is, this theory in putting together this portfolio is a little different than the others that we've done. Fourth stock, well, actually, let me just go back and fourth stock is EXPI. This is in the real estate services area. Went down, sideways consolidate. I actually see a bottoming head and shoulder pattern coming down, left shoulder neckline, head, right side of the neckline, just sitting in there, and then a big breakout on volume. So AD line near 52-week high, starting to show nice relative strength here, moving to about a 4-month relative high. But I love that massive volume, biggest of the year, and continuing to go higher. Fifth one, Teladoc. We've already talked about this one, so I'm not going to spend any more time on it here, but this is one of the 10 stocks. Next up, MYGN. I put this one in the daily market report today. I think I've talked about this one recently as well. MYGN, I think, looks really strong. I just like all of this sideways consolidation. And then as it started moving up, look at the AD line breakout. Earnings, huge day of accumulation on very heavy volume. We've pulled back to the 20-day. I think this is an interesting stock. And Myriad is in the biotech area. Teladoc software, Fastly also software. So we do have 2 software stocks. Next up is Wells Fargo. I've been talking about Wells Fargo for a long time now. I think Wells Fargo is one of the best banks. I think this stock has been heavily accumulated for a long time now, really since back in February. You can see all along this move to the upside. That AD line just keeps rising. Relative strength all the way back to November. It's been outperforming its banking peers. So I think Wells Fargo continues to look really strong. I like that one. TPX, I mentioned this one earlier. So again, I won't talk about it much here, but I do see a bull flag, great volume, beautiful move up. AD line looks strong, and relative strength also very strong. And then the 9th stock is Dexcom. Whoops. Dexcom, big move up recently with earnings, pulling back. This one's a little extended, but I love the AD line. This pullback came on lesser volume. we could get a move back down to around 480 or so. But I would be a buyer. I keep this one on my watch list. And then the last one is Chipotle, CMG, restaurant stock. Huge move up with earnings. It has continued moving up. It is stretched, no doubt about it. Maybe we get a little bit of a pullback, but that AD line's very strong, relative strength, a new 52-week high. And I think that one looks good. All right, that is essentially what I wanted to go over, John. Went just a little bit past 45 minutes, but I don't know. Are there any questions?
Well, just a couple of things. Somebody asking about the spreadsheet. I know that Aaron has put something together and posted it to the site, the reaction spreadsheet for annual members.
Yep.
The other question that came up is the top 10 that you just went over. Will those be on a chart list or just for the webinar here?
Those will be on a chart list. We can get those and send those out as well if you're interested
awesome.
in downloading. Yeah.
Okay.
For those who are not members of EarningsBeats, just to kind of so you understand what we're talking about, we put together chart lists for our members. And we probably have 20 or 25 of them. I mean, we do a lot of research, a lot of work, and put them in. We organize our work in chart lists. If you're a Stock Charts Extra or Pro member, we have links and passwords on our website. You can literally click the link and use the password that we give you. And you can download these chart lists right into your own Stock Charts account, which is a great feature. Stock Charts enabled us to do this, I don't know, a year ago or something. It's been a while now. And, our members love it. It's a great way for us to get to communicate our work. When we're done. Yesterday, we did our raised guidance chart list. I'm still working on the earnings and the future earnings chart list, trying to get those out maybe tomorrow. But this is literally hours and hours and hours and hours of work that we do, research that we do that our members can then just download literally in seconds. So it's a pretty cool feature to be able to download these chart lists. So that's the question was, will these 10 stocks be in a chart list like you see here? And available for members. And yes, I will try to get those over to Aaron probably tomorrow, and we'll get them on the website, and I'll let you know when that's available for you to download.
Question: when a stock is gapping up after earnings report, should we go and chase the price? How do you handle this? What are your suggestions?
Yeah, I don't like to chase after an earnings report because a lot of times the stock gaps up and then comes back down because market makers are on the other side of that trade. So when everybody wants to buy, market makers are providing the liquidity. So they're on the short side. Market makers don't lose money. They'll lose money on individual trades, but over time, they do not lose money. So in theory, when a stock gaps up, I would be expecting a fill of that gap to come back down. Not all stocks do that, though. I mean, you're looking on the chart right here at Chipotle. It gapped up and it continued going higher all day long, which to me, it's saying that there's so much demand out there that market makers they were forced to cover their shorts. They shorted at the open. Everybody's jumping in, kept driving the price higher, and market makers had to buy to cover their shorts. So they lost on those trades. That to me tells me there's a lot of interest in the stock. And I use the top of gap support as major support, not the bottom. I don't look for a gap fill after I see something like this. Somewhere down the road, and I don't know if it'll be in the next 2 weeks, 2 months, 6 months, probably we'll see a fill back to the top of this gap on Chipotle. So I don't like to place trades at the opening bell unless I'm getting on the side of the market maker. And now if you wanted to take that risk, that's completely up to you. But if I did anything, I would be doing opposite. Like GNRC, when that one gapped down, let me pull that one up again for you. When that gapped down, it was in the market maker's best interest for it to go higher. And I like the stock. So you can see that was quite a reversal. But if you got in at the opening bell, you would have had to have weathered the stock going down $20 intraday before it reversed. So yeah, it looks like, hey, all I had to do was get in. It would be nice, easy money. Well, your emotions would have been taking quite a toll on you the first part of that day when the stock was, trading down $20 from the open. So any trading at the opening bell or the first hour after earnings come out, I think is just tremendous risk, tremendous volatility. It's also tremendous opportunity for profit but you just have to understand the risk you're taking as well.
All right, we'll wrap up in just a second, but someone said you mentioned the Moderna is one of the stocks that you showed us. Given how much it's gone up, what would you do with it right now, if anything?
Wow. I mean, that's a hard one because you get these stocks eventually. I mean, if you look back at history, look at the stock, it ran from what, $60 here up to 180 in a month. And look what happened afterwards. Look what, if you held on the ride that you were going to take. At some point, Moderna is going crazy right now. At some point, it's going to reach a peak and it's going to sideways consolidate for months. Who knows when that's going to be? Are we going to go to 700 first? Are we going to go to 1,000 first? I mean, look back at what Tesla did when it made that year-long run. It went from, I don't know, what did it have, 5-for-1 split? And it went from 400, and I think it reached a high of 900 after it split. I mean, it probably was a 10 bagger in a year. I don't know how far Moderna is going to go. And it's very, I don't want to say I would just jump in because there's so much downside risk. Just a normal 20-day test, which we've seen plenty of over the last few months. Just a 20-day test, you lose $100 on this stock from 456 to 362. So I don't know what to say because you can't get into a stock like this without taking on a lot of risk. I would personally only be interested on a 20-day test.
Okay, let's wrap up. Can one use the freeze pane to be able to see the name as you scroll without messing up your formulas?
Yeah, I did that on Excel. I don't know why it didn't transfer over. But let me just transfer my screen here 1 second so I can kind of show a little bit about what I'm talking about here. Okay, so the question that's coming in is, on Excel, if you hover like in a cell like this, and then you freeze the pane, it's just a tool within Excel. What it'll do is it'll freeze this line horizontally and then this line vertically. So if I start scrolling to the right, for instance, these columns right here left of where I freeze won't move. And so as I scroll to the right, you'll start losing the earnings. It'll go behind all the rest of this. But as I'm scrolling, you won't lose all this other information. And when I scroll down, you won't lose these headings. That's the whole idea of freezing panes. But yes, that will be in the Excel version. Again, I don't know, maybe it's just because I did it in Excel and I sent it to myself on this computer, which I don't have Excel. I've got Numbers. And so when I downloaded it into Numbers, it just didn't keep the format. But yes, when you get the downloadable version on our website, it will be, the panes will be frozen on, those areas so that you can scroll.
All right. Last thing I just want to mention is, generally we have an actual webinar special that we can present to people. For some reason, we weren't able to get that completed, but I want to let everybody know that we have this special for people coming to the webinar, where in addition to getting the 12 months, you get a bonus month. So 13 months in all. So if you're interested in, if you're either, new to us, or even if you're an existing member on trial, just write to a support at EarningsBeats.com. And Aaron will go ahead and get you set up with that nice special. And I got to tell you something, we have a lot of stuff coming up. And whenever people ask about, membership, majority of our people are members are annual, Tom, because they like to go through 4 quarters. It's a really good time, the amount of time, to work with us. And so I just want to suggest to people that if you're thinking about membership, or you already have a membership, either monthly or trial, even annual, you want to extend, just write to support at EarningsBeats.com. And if you get that done by Thursday, you get a bonus month.
All right. Sounds good.
We're
I
done.
think that's it for me. So we'll be back next week. Like John said, we got some big webinars coming up, so make sure you tune in for those. Otherwise, everybody have a great evening, and be back tomorrow with the next Trading Places Live at 9 a.m. hopefully see you there. Take care, everybody. Happy trading.